Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help as many people as possible become independent and profitable traders. So, if that sounds like you, welcome or welcome back to my channel. If this is your first time here, I encourage you to explore some of the playlists that I have. There are a lot because I have almost 400 videos, and they're all quick videos from 5 to 15 minutes focused on one specific thing that can help you improve as a trader. So hopefully you can find something you're looking for, and if you don't, I am taking video requests. So you can leave your comments down below and I will add your video suggestion to the queue. Now, in today's quick video, it's going to be yet another trade breakdown. This is one of my favorite types of videos to do because it helps me to just reflect on the trades that I've taken, whether they went right or they went wrong or they broke even. This just keeps me sharp. And it's something that I encourage everybody to do just so that you can back test. This is essentially like my way of journaling my trades so I can go through my thought process every single time, and I just took it a step up by sharing this process with you. Trading is a very individualized journey. No two people are going to trade the same or be the same or think the same. So it's important to know your edge and understand why you're taking the trades you're taking and the confirmation and things that you're looking for. And even if you do decide to get a mentor or be a copy trader, it's going to be important to understand what's going on in the market so that if the trade goes in your favor, you can know what habits you should duplicate. And if the trade goes against you, you can know what mistakes you could potentially avoid. Now, every trade is not going to go in your favor, but it is nice to at least have some type of process that you can follow, and then you can fix the hiccups in the process. So this video is a trade breakdown and it was for gold. This video was posted on, I believe it was Tuesday, March 11th, 2025, and it was around 9:14 a.m. As we can see, the screenshot was taken from my phone on TradingView. Now, the trade before this was a gold buy from last week where we were able to secure pips up to 2930. So this week I was looking for sell opportunities. When I came into the market and I looked at it at 9:14 a.m., I saw that it was selling and the levels that I had marked a potential TP or area to target was 2880. And I said look for sell opportunities. In this case, I wanted my students to set sell stops simply because just jumping into the market is not always the best idea. Sometimes it's best to wait for the candle to close or just wait until you get all your signals. So I recommended I would look at the charts to see what's going on. If you want to take the gold sell, don't just jump in. Especially because I run a trading community, everybody is not going to see the charts at the same time. So we're just going to head to TradingView. I'm going to break down what I was looking at when I decided to take this trade, and then we're going to see how it actually played out. So the first thing I actually did was I used horizontal lines to identify the previous day's high and the previous day's low. So that's the very first thing that I did. Now, the reason that I do this is because, and I know it's the previous day's high because I'm using session breaks on my chart, and session breaks the chart into different sessions because I'm on the hour time frame, which we can see here and here. There's going to be about 24 candles in this session, meaning that the highest between these two lines will be the daily high and the lowest would be the daily low. So I think I was working off of this high, and this is not even the previous day's low. So I'm not even sure where this line came from. But anyway, we're going to continue to go through this process, y'all. So pretty much what happens is if the market breaks above the previous day's high, you buy. If it breaks below the previous day's low, you will sell. I really have to figure out why this line is here. And then I also look at my stochastic to see what my stochastic is doing. If it's facing up, and I'll just show you guys some examples like I always do. This is what a buying signal on the stochastic would look like for me. and this is what a selling signal on the stochastic will look like. Now, firstly, we are looking at the stochastic facing up, and we're seeing the blue line on top of the orange line. And also something I want you guys to notice on my chart, and if you decide to backtest this, is I've noticed that the best time to enter on the stochastic for a buy is when it crosses above 20. So we can look here and we can see how that's such a really nice buy entry. We have the same example here. We can see that's a really awesome buy entry. Here's another example. We have a great potential buy entry. And since this is gold, these are thousands of pips that are happening. Like it doesn't even take that long with gold. That's why I like to trade it. And then my sell signals would be something like this, right? Something like this. And this is where we are getting the stock facing down. And we have that orange line on top. And again, the best time to enter would be when it crosses below 80. We can see the cells are reflected there. So already I'm seeing that I was looking at this trade for a sell. But if I were to look at this on the hourly time frame, I can see that I'm actually getting buy signals. My initial trade I did was taking on the 5, so I can already see a mistake that I made in this trade, and we really need to figure out where this line came from. I'm thinking that maybe I was adjusting the trades as it was going on, but that's still not making sense right there. So let's go down to the 15 minute and see. Oh, I do see that it's a previous area of support. So maybe that was my first TP. Actually, no, I'm sorry guys. This is where I had my sell stop because it was the first strong area of support I can see. Now, I do want you guys to know that my trade has not actually triggered because my sell stop is so low. And I just came up with that sell stop because I used a previous area of support. When I'm doing my analysis, I'm going to use previous areas of support as TPs or entries, and I'll use previous areas of resistance as stop losses. So I didn't want to jump into this trade. I did set a sell stop here, and we're just going to go ahead and see what happened on this trade. Now, as we can see, I started my analysis on the hour, but when I come down to the 5 minute, I'm getting more strong sell signals, which is why I decided to enter this trade for a sell. I can see I have my rejection here, and I see the market continue to fall. So instead of jumping into the trade, I set my sell stop here at 2897. So if the market were to actually reach that place, even though this is about 1,000 pips down, I would feel more comfortable that if it got here, that it would continue to sell down to 2880. This would be a TP for me. This would be a TP for me. So I'm just going to go ahead and hit play, and we're going to see what actually happened in this trade. This was in the morning, so I probably should have waited until after 9:30 to take the trade, but let's see what happens. So we can see that my sell entry trade actually appeared to start holding as support. We see that we're now getting those buy signals on the stochastic. It's starting to face up. And even when it comes down to retest, it only appears to be retesting at that previous level of resistance. So I was wrong in this trade, I would say, because it has not triggered. Is the market ever going to come back down and hit my sell stop? I really don't know. Or is gold actually on its bull run to 3,000? I'm not really upset about how this trade played out because I didn't really lose anything. It's just more so that I could have had a better entry or focused on the buy. If I would have just maybe waited until 9:30 to see what was happening at market open and to not take that, I would call it an impulsive entry at 9:15. As we can see, this market just continued to push up. I'm actually going to speed this up a little bit so that we can see what happened. When I enter the trade, it appears that I am stuck in a zone of consolidation. This is the 5 minute chart, so we can see that for a couple of hours the market was consolidating, but it never truly dropped or got back down. I think that the biggest mistake that I made in this trade was maybe not waiting until 9:30. I did follow my process. I did set appropriate orders for what I was analyzing, but it just didn't play out in my favor. So you win some, you lose some, you break even on some guys. But I really hope that this video was helpful and it wasn't too confusing. As we can see, even if you've been trading for a while, sometimes you just don't get it right. So I encourage you guys to continue to practice to figure out what is going right in your trades, what is going wrong in your trades, and then just go from there so that you can fix it. But that's really all I have for you guys today. If you have any questions about this particular video or anything on my channel, you can leave them down below and I will be more than happy to get back to you. If you guys would like to register for personal mentorship or even have a one-on-one session with me, you can drop a session 7 down below in the chat and I'll get back to you when I can. But that's really all for today, rich friends. Until next time.